Mega caps continued to mask weakness under the surface as earnings season is in full swing. Let's go ahead and compare two different ETFs and take a look at what's really happening with the markets. What's up, guys? It's Brandon from Amphibian Trading. As always, please make sure you hit that like and subscribe button, and then let's get right into it. I want to start by comparing the QQQ and the QQQJ. I typically like to look at the NASDAQ composite, but the way that the indexes are weighted, with the mega caps accounting for so much of the index, it really skews what is happening to most individual stocks. So I think looking at the two separate ETFs here makes a little bit of sense. And for those of you that don't know, the QQQ is the NASDAQ 100 and the QQQJ is the next 100 biggest companies of the NASDAQ. Okay, so here is the daily chart of the QQQ. We had a follow-through day back on January 6th, which started this rally that we're in now. It was very broad-based back then. Unlike what we're seeing now, we had net highs as the market moved higher. You can see now we have this streak of net lows with this red background. But going back to January, we had this move higher, participation was broad, and we triggered a power trend, which you can see here with this green background on the market navigator. From there, in February, we had this pullback right to about this 200-day and the 50-day where these were meeting, about 9% off the high. Once this 50-day crossed above the 200-day moving average, the market started moving higher again. We saw money flowing into the mega caps as a safe haven during that banking crisis. And now here we are sitting right near the highs of this rally attempt as many of the mega caps reported earnings this week and lots of them had positive reactions. Now, if we go over to the QQQJ, here we are in that same time frame. So here is our January 6th follow-through day. Again, you can see here, the QQQJ moved pretty much in step with the QQQ as it pushed higher into February. This also had a power trend. However, this one turned off as the pullback from this February peak down to this March bottom area was much greater than the QQQ. This one was over 12%, where again, the QQQ was just about 9%. So this one turned off the power trend. This also triggered a market navigator circuit breaker, telling you to get out of the market at that point. We did get a new follow-through day here towards the end of March on March 21st. However, look how weak that rally has been since then. You can see it got met with distribution the very next day, and then all it did was come right up to its 50-day and start rolling over every time it met it, and that's now acting as resistance. But again, look at the net highs and net lows during this time. This has a red background signifying that there's been more net lows than we have net highs, unlike the January period here, where again, we had broad participation. Everything was moving higher together. Now, just because stock participation hasn't been great, it doesn't mean that it can't change quickly, and you shouldn't be updating your watch lists. You should definitely still be keeping track of stocks showing relative strength, looking for stocks that are acting constructively, having nice volume patterns, nice price action, and could offer a low risk entry if the market does want to gain some ground. Okay, let's go ahead now and take a look at some stocks that are on my radar. First up is going to be Arista Networks, ANET. This one I talked about last week as having this first touch of the 10-week line since breaking out of its most recent base. There's a lot to like about this chart. We spent the better part of a year going sideways, forming multiple bases, each one becoming shallower and more constructive, where this latest base was only 23% deep. We broke out on very nice volume. You can see the volume surging as we pushed higher, continuing to see accumulation. And then now we've actually formed a flat base. It's 11% deep, 5-week long, and it's showing accumulation. So looking at this first down week here, even though the volume is above average, if you look at the price action, you can see it pretty much closed unchanged from the previous week, and it closed right at the 69th percentile of the weekly closing range, which is showing accumulation. So this base is very constructive. you have the accumulation in the beginning. Volume dries up significantly here as we just drift back towards the 10-week line. And then this week here, look at the volume come back in as we find support at the 10-week line and we close in the 98th percentile of the weekly closing range. So this one has a lot to like on a weekly chart. If we go ahead and look at it on the daily, same thing, very constructive action. The only thing that I would say about this is it does have earnings coming up on Monday right after the close. So it's not buyable before that. Otherwise, you're just gambling. However, if we do get a positive reaction to the earnings, we gap up on Tuesday, that could be buyable if you like playing earnings gap ups. Otherwise, we'll have to see how it reacts to the numbers. Speaking of earnings, let's go ahead and take a look at Chipotle. This one reported earnings on Tuesday after the bell and had a great reaction to a great quarter. You can see we had this big gap up. We had the highest volume in over a year, coming in at over 469% on the day. We also had this rare combo of the earnings gap up being an open equals the low. So that's a powerful signal. This one is one we're going to want to watch to see how the market treats such a powerful move. You can see on the weekly chart, we had this most recent base that we already had broken out of before the earnings report. We had the relative strength line going into new highs, leading into that report as well. Now we had price close right near the peak of the week. Volume, massive, 153% above average for the week. This one, again, we're going to want to watch and keep an eye on it. How does the market react to this going forward? Is it going to keep leading or is it going to pull back in and get held back by the market? So definitely one we want to keep watching. All right, next up is Airbnb. So this one had a very nice reaction to its earnings report last quarter. As you can see, we had this massive volume, this nice up week here. And since then, we've pretty much gone sideways, forming this latest base as the volume dries up. You can see we also have some constructive action here with some tight weekly closes. And if we look at this on the daily chart, you can view this in a few ways. There is this quasi double bottom forming here, which it's not textbook, but that is one way to see it. Or this could go on and just form a nice cup base like that. What I'm watching for is the way we react to this earnings report coming up on the 9th, and also how we respond to this 50-day moving average, which is the red line. You can see since this last earnings report here, where we gapped up very nicely on the highest volume in over a year, we've come down and we found support at the 50-day, which is this red line, and then we broke below it, and now it's flipped into resistance here and here again today. So I want to watch this to see if we can get above the 50-day and maybe have a positive reaction to earnings. We could potentially buy this if it breaks above the 50-day with heavy volume before the earnings report, hoping to build a cushion before they actually report those numbers. Okay, last one for today is Elf Beauty, ELF. This one I'm not watching to look for an entry point or to buy it, but this one I'm watching to see how the market is going to react to this now. This one has been one of the leaders, if not the leader of the last rally, and now we've triggered a sell signal by breaking above this upper channel line last week. We had this flat base in November and December, which we broke out from, and then here we push above the channel line, and this week the selling pressure picked up as volume increased and we closed near the bottom quartile of the closing range. So this one I want to see now if it's going to go ahead and form a new constructive base and continue to move higher, or is it just going to fall apart and break down? We got to see how the market reacts to this and how it's going to treat this leader. Okay, so there are some ideas that I'm going to be watching closely to see how the market reacts and responds as we progress in this rally attempt. If we want to see a sustained rally, we're going to need to see breadth improve, and we're going to need to see these key stocks hold up and start making advances. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.